All right. Good afternoon, everyone. And thanks, everyone, for joining our next panel.
It's a nice little red book you got there, John.
Thank you. Yeah, little red book. So without further ado, the name of our panel is The Next Step in Crypto Finance, Advanced Instruments. And as a quick preface, we all know that crypto has been lagging. It's been behind traditional capital markets. And of course, it's because it's much more nascent. It's only been around for less than a decade. And there's a few things that will still need to take place before it truly achieves adoption, wide adoption, as well as scale. And some of those things include the regulatory aspect. So currently, there's essentially a lack of regulatory clarity that would allow for much greater adoption by, say, institutional money. So that's the second point. There's currently a relative lack of institutional participation in the space. And we're starting to see some fits and starts of well-known global traditional financial institutions moving into the space, but still not yet to the degree that I think we would need to see before it really reaches wide adoption. And third and finally, it's a lack of mature products and market mechanisms that I think are holding us back before we really achieve great scale in crypto markets. So what we're going to do as part of this panel today is to explore how crypto finance will evolve, what additional elements of traditional finance might we see crypto markets draw inspiration from, and then also perhaps even ultimately converge with. So with that, I'd like to introduce my fellow panelists, and I'll just call out by name and company first. I think there's some familiar faces already on the panel, and we'll allow my fellow panelists to provide a brief intro as well. So at the far left here, your right, I should say, we have Zhou, who is the CFO of Binance. We also are joined by Justin Chow, who's the head of BD for Cumberland. And we also have Alex Dreyfus, who is the CEO of Chilliz. So as a quick starter, I know you've already done this for both Wei and Justin here on the stage, but for the sake of people that may not have had the opportunity to join your panel earlier, please provide just a quick sentence or two as to your background.
Hey, everybody. I'm back. Same seat. My name is Wei. I'm the CFO for Binance.
My name is Justin Chow. I run business development for Cumberland. We are a large OTC trading firm based out of the US.
I'm Alex Dreyfus, CEO of Chilliz. We are a Malta-based company that is tokenizing sports teams like Juventus or Paris Saint-Germain.
Great. And I'm Jonathan Hahn. I'm a partner of Ledger Capital, which is a digital asset investment firm, as well as investment bank. So I wear two hats. The other hat that I wear is I'm also founder CEO of a tokenized financial research ecosystem called Red Pulse. Okay, so let's go ahead and jump straight into the topics that we want to discuss. First, what I wanted to kick off with is the concept of security tokens. Now, taking a slightly different angle than what we had discussed on the panel earlier this morning, I wanted to think about security token exchanges and how they're different from current existing crypto exchanges. And I think, Wei, you probably can weigh in with some interesting thoughts on that.
I think one of the unique things about security is that pretty much anything that is defined as security is actually defined as security in different jurisdictions. And the access in terms of purchasing it have different governance depending on where you are, based on your jurisdiction, based on your nationality as well. So as an exchange, you really have to navigate until there's sort of like a central governing to security law saying that these are the securities, these are the rules and regulations behind it, these are who can purchase it, if they're professional institutional investors or qualified, or as they call it in the US, these definitions in different jurisdictions. So as an exchange, you really have to go out and get licensed in different jurisdictions. Or you basically have to shut off different products to different investors from different regions. So that's sort of like, I would say, the simple approach. That's sort of, I would say, the negative approach in terms of, denying, or restricting There's also sort of, I would say, hopefully down the road, an open approach, which is sort of like the open API approach. Is like certain tokens are whitelisted to be traded on certain regions by certain individuals because there are promoters similar to sort of like the Hong Kong Stock Exchange, where the exchange itself just provides the trading platform. You have the broker-dealers actually does actual trading itself. So these sort of alliances, I would say, provides for a whitelist of individuals or investors to trade certain type of securities. So sort of that's, I would say, a high level of our understanding of it.
Sure. And how might regulations provide further help in that regard, or actually hindering that process?
I mean, just to be honest, like I think I would say a lot of it depends on what kind of the underlying security is. Like for example, if you look at the stable coins, is it a security? Is it not a security? I don't, it's not, based on the existing legal definitions of it. But, that's sort of like, a form of currency, right? If you look at just sort of like securities as a whole, there are a ton of securities out there. There's real estate, fixed income, equity. So, so I would say we're in the very, very early stages of thinking about security tokens.
Okay. Coming at it from a slightly different angle. So we have, of course, Alex on stage, and he runs his own tokenized business. And as a business person, of course, being in the crypto space, because that's the form in which you've fundraised, what do you need from the market?
Well, in our case, we did a private placement earlier this year. We raised $60 million. And as someone who was actually an opponent of cryptocurrency 1 year ago, I had to adapt and learn a lot for the last few months. And one of the things that we need as a company, or we needed, was how we gonna be able to either liquidate a cryptocurrency that we raise or hedge a cryptocurrency that we have. And that's, I guess, as a company, that's what we are looking for the most, because that's not our background. At the end, we as a company, like any traditional so-called startup, we focus on the product, and everything that is derivated of our company has to be either outsourced or working with partners for that.
Right. And which makes a lot of sense, because your focus is to run your business,
yes.
Right? Develop product, cater to your clients, your user base. And the financial aspect, you perhaps want to either delegate to your CFO, or in this case, perhaps even someone outside of your organization.
Yeah, I guess that we do have a CFO for traditional money, but for our crypto assets, we do have to work with professionals, because that's a completely different game. And again, my time and the time of our management should focus on the product and actually on user acquisition and adoption, rather than on trading assets that we have. Because at the end, we have to deliver a product. That's what I'm paid for.
Yeah, so two things I heard from you, Alex, are you're looking for liquidity as well as hedging, and those particular products that he's looking for. So Justin, any thoughts on how current service providers might be able to cater to those needs?
Yeah, I think it's difficult. When we look at the crypto universe now and where we are in its development, it's still extremely early. And so, most of us in the room who do or do not own or trade crypto assets will probably trade just the physical underlying. And so if you think about that in the sense of traditional capital markets, that's like the very first inning or development of a capital market. To get to the advanced instruments that Alex is looking at to hedge, you would need something like forwards or options. We're not quite there yet, and the reason we're really not there yet is because cryptos are traded bilaterally, and so the lack of a sort of a custodian or a prime broker, which exists in the traditional financial world to provide you leverage and security and to keep track of collateral for margining, it doesn't really exist in this space yet. So if you were to go out there and trade, a forward or an option with somebody, it's done bilaterally, it's called, which means that you effectively are engaged in a contract with that individual, that entity, that you're offering the derivative, and you're trading a derivative instrument. And if it were to move, the prices of the underlying were to move at a certain point, they would owe you or you would owe them money, et cetera. But it's very difficult to keep track of that bilaterally, because I'm not going to keep calling John every day and be like, John, you need to post me collateral. John, you need to wire me some money. I got to wire you money tomorrow.
I'm good for it, though.
I'm sure you are. But so that doesn't exist right now. And so, even though we have engaged in a few bilateral forwards, it's with counterparties we know are very reputable, and we have a strong track record with. But to have these type of financial products in a sustainable way that's accessible to the large public, you need the infrastructure to be built first. And so I think the moral of the story here is that there are a lot of really smart people working on it, and they're building out this infrastructure now, custodians, et cetera, prime brokers, et cetera. But the current ecosystem doesn't really allow for a economical way of hedging your exposure. The only way to do that is to sell your crypto.
So you mentioned forwards, you mentioned options, and the current bilateral aspect in which people are currently engaging with the market and with service providers. What's the main hurdle right now? You had mentioned infrastructure build out, but is that because people are, from a business perspective, not willing to do so, or is it from regulatory challenges that they're not clear on how they should go about doing so? What are the reasons for that?
Yeah, I think it's actually really complicated. There's so many moving parts. From the regulatory standpoint, most derivative markets in the world are actually regulated, so you need regulation to a certain degree. There are some exchanges right now that offer margin trading or the ability to short, et cetera. You could use that to hedge, but it's, again, not really scalable in the sense of being able to fulfill a institutional quality platform. I think some of the other stuff, in addition to the custodian. So a custodian is a venue that actually holds all the underlying, and then because they hold all of it, they can lend some of it out, and that you know that they're lending it out. If they can lend, then you can short, actually, right? A prime broker is effectively a vehicle in traditional finance that operates on, similar to a custodian, and they provide you margin trading, et cetera. And as mentioned in my example, they'll literally call you every single day and say, oh, you've reached this threshold, you need to top up your margin. Think of it as like you bought a house and you have a mortgage and the value of your house goes down. Your banker will call you and say, you need to top up your mortgage, right? So that they know that you're good for the underlying. So it's a very similar kind of thing. There are other things involved as well. I think you need more liquidity providers out there. A forward curve is, a forward agreement is an agreement to settle a contract in the future based upon a price agreed upon today. And so you need more guys who are willing to market make that, to have proper price discovery. The space is just too small. It's just too early right now. But the idea that it could develop into this full-fledged ecosystem is very exciting. It's part of the reason I moved into this space as a long-time professional trader. The idea that we could have underlying that I could trade on Binance or somewhere, and maybe one day we trade options and forwards and swaps. And just having the ecosystem grow into that full-fledged capital market is not only a natural development for traditional markets, but it's really exciting because there are opportunities there to trade, to put on positions, to speculate or to invest. And again, with the ability for more participants to be able to hedge, such as Alex, it will just be encouraging for more people to enter because they know they're not going to have to take long-term exposure in Ethereum, for example, if they were to do an ICO.
Makes sense. Wei, from your perspective, from an exchange perspective, what are some of the instruments that you're potentially looking at to include as an offering? Because right now everyone knows, of course, Binance as a crypto-to-crypto exchange, but there's a few other major competitors that have gone into pretty aggressive margin lending business and other types of derivative products.
Yeah, I think one of the things that we really look at is sort of there needs to be a balance. Like I think one of the things that for Binance per se is that we are very protective of our brand, and that's the only way for us to build a large user base in a continuous and sustainable fashion. If we do enter into, I would say, the futures options trading business, there is something that you have to do on your client, which you have to margin call your client. And to a certain degree, if they're not professional investors or retail investors, and they don't really have the full knowledge of what they're doing, it's going to damage your brand to a certain degree. So that's something that we're very, I would say, circumspect about whether we want to enter into this business that some of our competing exchanges do offer services in and have had nightmare scenarios happen to both the exchange and to people that trade on that exchange. So.
Yeah, I think it's a really good anecdotal point that you bring up. The fact that other exchanges have been more aggressive in providing these different trading instruments and have unfortunately been a victim, I suppose, of bad trading. Bad actors, whether intentional or not, is certainly a point to consider.
Maybe I can just add in some commentary around what Wei said as well. I mean, if you think about traditional markets, like Interactive Brokers is this company in America that you can sign online brokerage account. even if you were to go and sign up an Interactive Brokers account, if you wanted to be able to trade something like options or futures, you have to go through this KYC checklist. And they say, oh, how long have you traded these things for? Are you a professional trader? When I signed up, I was like, I can't believe I have to fill this out. But it shows that they're aware that these instruments are, they're complicated. And it's not so simple as, oh, you just buy this option, and if it goes here, you'll make money. So I think, again, even in the crypto space, it's the same thing, that it may have, the industry may be trying to move too quickly into having these derivative products, when a lot of the time the user base doesn't even understand the risks associated with it. Just to give an example, DRW, the parent of Cumberland, is one of the largest option trading firms in the world. The head of Cumberland used to run FX options at DRW, but we don't trade options in crypto right now. So again, we're quite risk adverse, even though we do take sizable positions in the market. But again, it's the understanding that you need to know that the infrastructure is in place to protect yourself. If I go and I buy an option from somebody, and I got to know that they're going to be there to make whole on it if it goes through their strike. We don't have the infrastructure in place to continually make sure that their collateral is good. There's no fund administrators in this space, so we don't know what their true AUM really is. So there's so many different things that need to develop. But again, I think the positive and the exciting thing is that the potential for it all to develop is there.
Sure. Well, we are starting to see the beginnings of traditional financial institutions moving into providing some of these intermediary custodianship services, such as Fidelity, right? And so Fidelity, they're not very well known as a custodian of traditional securities. So it was interesting that they made a pretty big splash in announcing that they're moving into custody of digital assets. So do you think that's going to be a major success factor, a major driver for more institutional money, more well-known existing service providers to move into the space?
Well, when you think about like trading crypto and you want good pricing, you want good liquidity, right now, one of the first names that comes to your mind is Binance, right? If you're a traditional investor and you think about reputable institutions, long-only funds, mutual fund managers, Fidelity certainly is right up there on that list. And so the custody game is really about trust and reputation. I've met a lot of really brilliant kids in my journey in this past year who've come to our office to show us their pitch book on a custody solution they're working on. Some of the technology is way over my head. I look at it and I'm like, I have no idea. Let me refer you to DRW Venture Capital. They'll take a look at it. But at the end of the day, if it's just a great idea, but it's somebody that doesn't have a reputation, who hasn't developed that trust from the financial institution world, it will be hard for them to adopt that. So to answer your question, I think certainly Fidelity entering the space is a very positive catalyst for the industry. Again, they provide financial institutions as well as professional investors the ability to access this ecosystem. Same with the CME, CBOE futures. There are guys trading there that unfortunately cannot trade on Binance. So these are just small steps in the right direction, I think, for the industry to show maturation. But the question is, as I mentioned earlier today, what is the timeline between, building the dam and having the water be able to actually come through? It takes time for people to be able to actually participate in the market. Just because you give them the means to doesn't mean they're going to show up on day one.
Makes sense. Yeah. From a business owner's perspective, and you have a CFO, of course, and you mentioned that he's more focused on traditional capital markets, right, and managing your portfolio, managing your treasury. So what instruments are you using right now, outside of crypto?
We don't use objectively, I will say we don't use any specific instruments. We just take care of the money that we have to make sure that we can pay salaries, right. and we have, let's say, the runway to launch the product and to develop this. But for me, I'm coming from a complete different world, and I'm happy to be on the other side of this panel because I believe there is too much efforts putting into financial product and not enough user-focused product. As an individual who doesn't understand anything about futures, options, ETF, it's already very difficult for me to trade even on Binance, on any other product. But I cannot believe that this can grow mainstream without real, I would say, application for users using cryptocurrency, either as a tool to transfer money or other digital asset that you can invent. But I guess for us, we are a very basic company trying to develop basic product. We use crypto, or we used crypto to raise funds, and that was successful. But our real play is how we're going to survive in the next 2 to 3 years by delivering a product that's going to be successful and having hopefully millions of users that's going to use it.
But you guys are creating your own token system, though. Right?
Yes.
I mean, the Chilliz tokens is the underlying token. Well, I'm saying this because we actually invested into this token project. Because you're basically creating the Chilliz token as the underlying token that fans can use to vote, quote unquote, onto their favorite teams and favorite activities and stuff like that, right? I mean, that's actually, because we're talking about crypto finance, right? I mean, this is like, I think we really, like for Binance, we believe in the tokenized future, right? And hopefully with all your tokens, you come to Binance to exchange it. But that being said, is that like, you can create your own sort of like tokenized space.
Yes.
That's sort of that's the beauty of cryptocurrency, right? It's like you can create your own ecosystem and bring on, as long as you can bring the community onto your platform, you can trade that, right? And what Alex is doing is like, he's tokenizing fans, right, of different sports teams. And
I should hire you.
Huh?
I should hire you.
So, because that being said, then that token that he creates then has liquidity in the secondary market that's traded on Binance. But at the same time, if you want to access sort of Chilliz, through Chilliz, you can access, basically that becomes sort of like, because I play a lot of video games growing up, right? It's the same thing as sort of like you buy a video game token, right? You go, and then you can go to that, offline world. It's like a long time ago. I buy like, a box of token, and then that's the token I use to play these games, right? Same in this space, except that token that I buy, I can use it at other places, right? And then I can trade it on Binance and go use it as his arcade or his arcade or his arcade, right? I think that's really sort of the beauty of sort of like, crypto finance in my world. Because I think for sort of everything that Justin says, for that to work, you need more capital to come in, right, into this world. But the thing is that what's the capital to come in for, right? Because you're just like, a lot of times what we're seeing recently is that people are just splitting amongst themselves. You actually need better projects to attract larger capital into the ecosystem, right? I think one of some things like that we're excited about is there's actually a lot of like top tier projects that have done ICOs the last 6 months that haven't really listed yet. Like, for example, Telegram, right? Like, I mean, these are just kind of like, the equity market's waiting for the Uber IPO or waiting for the whatever. I mean, in this world, we're waiting for some of these ICO projects, the really high quality ones, that's basically going to come out. And I think that's going to attract, more attention. It's going to attract more capital. And then the entry point then perhaps is Bitcoin, or maybe it's BNB, So I think that's sort of, I want to bring everything tied together.
Yeah, nicely put.
Yeah.
And in fact, I think one of the things that Alex is looking for, liquidity, is one of your key strengths, in providing that as a service to business owners that have tokenized their business. But what I also hear from Alex is an opportunity, for some service providers out there to provide more of an end-to-end solution, because, from your words, and I paraphrase, you're focused on building your business. Mm-hmm. Of course, it's important to manage your capital properly, but you don't have the time or the focus to be able to do so yourself. If there was somebody out there that could provide a one-stop solution for that, that might be quite interesting to quite a lot of these tokenized businesses out there. So, although I know you said earlier that you don't have much interest in how an ETF works, and whether or not we're going to see Bitcoin ETFs, it's still a pretty hot topic, and people view it as one on-ramp for more institutional money to come into the space. And it's a bit of the chicken or the egg. People say, well, I think what will make the industry mature is if more money flows in, and the more institutional money that flows in, they will demand better corporate governance. They will demand better risk management. They will demand disintermediation so that it's not bilateral-based options. But at the same time, for them to come in, they want to see that there's already a fair amount of maturization in the space, right? So, what's going to come first? It's great to see Fidelity come in, but at what point will we see that inflection point? And what will it be driven by? Any thoughts?
Well, I'll take a stab at it. I think the idea of a crypto-backed ETF, well, it's not new because it already exists, is really interesting and quite exciting as well. That's probably more for like providing retail investors, I think, access to the ecosystem. When I say retail, not the retail who are tech savvy enough to open an account on an exchange and trade and take custody of their own physical crypto into a wallet, but the kind of retail that buy REITs, or they buy the gold ETF or the S&P 500 ETF, a simple financial product. They may already have a brokerage account and say, oh, now I can click a button real quickly, and I don't have to send my passport and photo identification to an exchange. I can just do it really quickly here. So it'll provide them that ease as well. I think the mechanisms, it's actually quite complicated, but the mechanisms of how the ETF is going to be structured, what it's underlying that it's going to be purchasing, is it going to be the CME and CBOE futures? All that stuff is the devil's in the detail, and I think that's really where they need to work on that, plus the custodian part of it, to be able to launch a viable product. But ultimately, I think, again, these are just still positives for the long term. I think one thing that people don't keep in mind, though, is that there are these regulated products right now, and Binance is launching a regulated exchange as well soon. That's kind of the way the space is moving. And whether it's providing a conduit for more retail investors or participants to enter the space in a less friction, in a frictionless way, or institutional investors, all of that theoretically could provide the means for the industry to continue to move in the right direction in the long term. With some of the products right now, like the regulated futures, although you can actually short them and be naked short. So there may be participants outside of crypto who are looking to this space that say, oh, I would love to short this, and now you're actually giving them the means to do so as well. So be a little bit careful. It's not always like, oh, this new product is great and it means more money is going to come in. It might mean that people actually take money out of it as well.
Yeah, fair points. So absolutely, ETFs are primarily retail-driven in that it makes it much easier for people to gain exposure without having large amounts of capital, without having to necessarily be able to diversify across multiple asset classes. So very fair point. And Wei, you had mentioned earlier that you're also building a fiat on-ramp in Uganda and an exchange as well.
Yeah, I think we've launched multiple services. I'm going to pitch our business a little bit. In addition to being a crypto-to-crypto exchange, we launched a fiat-to-crypto exchange based in Uganda. It's Uganda shilling, 4 trading pairs: Bitcoin, Ethereum, BNB, and PAX. So that's just I would say an interesting, more than just an interesting project. I think it's something that we really believe in, sort of driving crypto to leveraging crypto to increase the access that the African continent has to traditional financial services. We're going to try to we're working with a local mobile money provider, and we're basically looking to roll out more trading pairs in terms of the baseline currency with various mobile money service providers in other parts of Africa. Something else I just mentioned, the regulated exchanges, actually we're looking to launch something in Singapore that CZ has mentioned before. But to answer sort of Alex's thing is something that we've also recently launched a treasury management solution that's access to all of our token projects, tokens that are listed on Binance, but to other sort of ICO projects as well, to help you with your liquidity needs during the short term and during this volatile times.
Sounds interesting. Something that you could potentially use.
Potential. Well, in Uganda, I don't know, but yes, definitely.
I think you'd have to be listed first on Binance, then. So we'll get that sorted for you after the panel. Also related to that, Wei, you'd mentioned treasury management, but would that also include access to other types of products? So because there's a fiat element in Uganda and also more close to home here in Singapore, would there be access on platform for other types of crypto and perhaps even non-crypto products?
I mean, I think the way to think about this is actually depending on your fiat needs. I think one of the biggest breakthroughs that we see right now in terms of fiat on-ramp is because of, I would say, the difficulties. It's actually much harder to buy crypto now than it was, say, 2 years ago, because the traditional financial world, especially a lot of the banks, US-based banks, banks in other parts of the world, have actually made it much more difficult. So that's why we believe, starting at the beginning of this year, that fiat exchanges is a very important on-ramp and off-ramp to basically drive additional crypto adoption, right? So that's why we have plans to launch. I think what CZ said is to have 2 fiat crypto exchanges in every continent around the world, right? So that's part of what I'm doing in terms of expanding it. But in terms of short term, because that'll take time, right? And but in the short term, I think one of the really nice innovations that we've seen is actually the use of stablecoin. There's 4 stablecoins that are now listed on Binance, and they provide, a salvo, I think, during these times for you to sort of, I would say, divest or to de-risk. And that's not just for general investors, but it's true for listed tokens as well. Great.
And also to pitch a bit about Ledger Capital. So one of the things that we've done as an investment firm is to delve headlong into research into the security token space. And one of the things that we found is that there seems to be a shift taking place in how people view security tokens. They're no longer, at least from our perspective, should be viewed as just another flavor of ICO. It's just the next iteration. Okay, ICOs, they're out. STOs are in. But there's now a growing belief that security tokens are really just securities, after all. They're just the plain old securities that we all know from the conventional financial markets, equities, debt, instruments, options, so on and so forth. And they're now adding a blockchain component to it. And so what I want to ask as a final question is, with that kind of convergence potentially taking place, what else do you see, awaiting us in the next 2 years as crypto markets continue to evolve and mature? Will we see convergence between crypto markets and conventional markets, or will they diverge into completely two different mechanisms?
I love this question. Yeah, I'll take a stab at it. One of the things that I can envision in the future is, especially with something like Fidelity that provides a custodian, if they were to have a lot of deposits there and people were to put their Bitcoin or other cryptos there, what you can actually start doing then is you can have a paper market where they actually trade the derivative, but it's a spot paper contract. I think an example would be like gold. I've used this before. You can go down the street and buy a gold bar from a pawn shop, and you can custody it yourself and stick it in the safe in your house, and you pay a gigantic bid offer spread. And then you can go, and I think it's on the NYMEX exchange in the US, and you can buy gold futures and pay almost no spread and no transaction costs. And when they launched the gold futures, the underlying gold is stored in a vault, and the volume and the liquidity in the gold market absolutely exploded, and it was, good for the world. Anybody could have access to it now. There's a gold ETF that was built on top of that. I like to kind of call it the hybrid system, where it's potentially the same thing could happen in crypto, where it's possible that there are only 21 million Bitcoins. God knows how many are already lost. Let's make a number up. Say there's 17 million Bitcoins that will only exist ever in the universe because the rest have been lost. It's possible that people don't really want to, if the price of one Bitcoin goes to $1 million, I don't really want to hold my own Bitcoin anymore. It's kind of scary. So you want to put it in a place that it's custodied. You want to put it in a place that it's insured, and you may trade a paper contract on top of that. Like a title deed if you were to buy a house, I guess you could think of it that way. Or next section, that's not a great example. I think the futures example is better. But at the same time, if I wanted to send away my buddy, some Bitcoins, or a fraction of a Bitcoin in that case, I could easily do that. So you could still have the P2P nature, but it's possible that a large majority goes off-chain and they're on these paper contracts. And so if that were to happen, that would very much follow suit after the traditional capital markets. And then from there, you could get the whole ecosystem to evolve, because once the assets are custodied somewhere, you can create futures option swaps very easily. I think the stock market is a great example. When you buy stock now, in the olden days when you bought a bond, you actually received a piece of paper in the mail, and there was a coupon that you would cut that coupon off of it, and you would take it back to the bank, and you say, oh, I want my interest payment. Nowadays, it's all done electronically. You don't even see that paper. It's held at a custody bank. They take care of everything for you, all the wire transfers, all the settlement, and they charge you fees on top of that.
Okay, convergence.
Convergence, yes.
Okay. Wei?
I think we're going different ways. First of all, we're 24/7. It's hard to find. So either they're going to come towards us and open for longer hours and let you trade.
Always open.
It's got to be always. You got to stay open 24/7. I think that's something that is a lot harder said than done. And I think no, just going back to what I said earlier about security tokens and how is that going to be traded on a digital exchange that's opens 24/7 and has users from all over the world, both institutional and individual, is that it's going to look, I think it's going to look very different from the current equity market or the current fixed income market. In that the portability of it, I think that's something that doesn't really exist in the traditional equity market. It's something that's in your name, but essentially it's still stored centralized. Whereas in this case, you can literally take it with you. You can take your own wealth and you can take your own asset, whatever it is, you can take that with you. I think that portability of it is something that doesn't really exist in the traditional security world.
Got it. So 2 different mechanisms and perhaps divergence. What do you think, Alex?
Well, me, I'm in the middle. I have no idea.
Okay. All right, you'll stay neutral. You're Switzerland. Neither convergence nor divergence. All right, I think that's the end of our time for today. Thank you, everyone, for joining us for the panel, and please give a round of applause for our fellow panelists today.